Hey, everybody. Welcome to Reimagining Main Street. I'm here with Patrick Lee, CEO of Spark Business Institute. Hey, Patrick.
Hello.
So, the US economy is rapidly emerging from the pandemic, and in a lot of ways, things are looking different. Let's talk about what we're seeing and what it means for small businesses.
Well, I think we're seeing a lot, and there are three main areas where we see changes coming out, from the pandemic. Those areas are the labor force, and there's been a lot of discussion around that, and there's a lot of talk about that. Supply chain issues and changes in how that's being handled, and then consumer behaviors, right? Like how folks are accessing their goods and services. How willing are they, to go back out? Are we going to stay with a lot of this technology and online e-commerce type stuff? So all three of those areas are significant, and I'm not sure people can predictively say exactly where they're going to end up. So let's look at them a little bit. I think with the labor force, we are all seeing the help wanted signs nearly everywhere you go. And we're all reading these articles about how people can't get folks to come back to work. And there's 9 million jobs out there that aren't filled. And businesses are having to make do with fewer employees, which is impacting everything from their hours to production and delivery of services, timely delivery of services. Also, how they're trying to recruit. I mean, we're seeing a lot of this, signing bonus stuff and jobs that you would never have dreamed something like that would even be possible. So there is some definite shifts going on there.
Yeah, and we are also seeing prices for everything from gas to groceries going up, and the labor shortage just kind of compounds these things. And it has really played into the supply chain disruption. So not only were people, shut out of work by the pandemic shutdown, but then a lot of the employees didn't return in the same same number of hours to their posts. So a lot of people are familiar with the material shortages that have driven up, the cost of home and construction, and how short materials are to come by. Like, don't let your refrigerator break down right now because it's really hard to get an appliance. So, and when you do get these materials, they're very costly. We are seeing some of that being adjusted as production levels were able to ramp up. Some of the costs on some of these things have come down. But this insecure availability has meant skyrocketing prices for a lot of things. And one of those we've seen is used cars. Some used cars were actually selling for, up to 30% more than they sold originally, because it was so hard to get a car because the chip manufacturers were so back ordered that new car companies couldn't produce new cars because they couldn't get the chips. So things like that are happening all over. Those are some of the high points or low points.
Yeah, probably low points. And you got to think about that too. You put that with, consumers having had to adapt to a massive amount of very quick change, right? From, those technology adaptations that have altered the way that we order dinner, groceries, whether it's curbside or actually delivery to your door. But those changes in delivery and have created new expectations too, right? So, what does service look like? So before, service meant I went into the store, bought my stuff, and I could either find it or couldn't. I was treated well or not. But now it's, service, was it packed nicely? How quick did it come out the door? And how does that transfer when we start looking at going back to some of the old ways? Are we fed up with the old ways because the service is now somehow different than what we were expecting there? So, that's kind of interesting. That slower, inferior service is not uncommon with labor shortages, right? Or new hires. So there's a compounding thing happening here. Plus, a lot of new technology and systems present that learning curve. So in a lot of cases, consumer behavior has been completely disrupted. It's unlikely to return to how it was before, but it's also unpredictable as to what it's going to look like moving forward.
100%. You know what that makes me think of, Patrick, is, the little SKUs, scanner codes you have to scan now to get a menu. The poor grandmothers that don't know how to use their iPhone, have to sit there and try and figure out, can I get a menu? Can I just have a paper menu?
Yeah, yeah.
In some cases you can't. The answer is no. So that's just a very small example.
It's a good example though, because I've experienced that myself. Like, where are the menus, and they're pointing at the table where there's a little QR code. I'm like, oh, okay.
Right, exactly. So according to Heather Long, I was reading her article in the Washington Post, which was entitled "Shifting Economy Leaves Americans in Limbo." That as of in February of 2020, so pre-pandemic, the unemployment rate was 3.5%, no sign of inflation, wages are rising, and we're just all kind of recovering from a multi-year trade war. So the pandemic disrupted all of that and left some parts of the economy damaged more than others. And she points out that the mass vaccination efforts really have allowed businesses and communities to reopen. But what we're finding is unrecognizable. It doesn't look nearly the same as 16 months ago. And to your point, Patrick, prices are up, housing is scarce. It's taking months and months to get furniture, appliances, and parts. And there's a disconnect. We've got millions of vacant jobs. We've got millions of unemployed workers, but they're not connecting.
Yeah, and it's interesting when you start looking at that lack of connection there, because there's been a lot of stuff put out there. For instance, the benefits being on unemployment are just too good, and we have to stop that before people are going to go back to work and so on. But I'm not sure that the people who are out there looking match up to the jobs that are out there available. There's been some shift there that I'm not sure has been fully analyzed, and I'm not sure you're going to get the labor force that's currently looking to settle for the jobs that are currently there. So there's something going on there. And, to that end, the Federal Reserve has indicated that, policymakers have misjudged parts of the recovery and that they aren't certain what exactly will happen next. So, there's a bunch of questions here, like, what is temporary change and what are fundamental shifts, and how do we bet on which ones are which, right? That shift to remote work, is it temporary or is it permanent, or is it likely in the middle? But if it's in the middle, how much in the middle? And is it going to affect me or not, right? So, on a mass scale, what does this mean? And I think part of the interesting piece to this whole thing is that, in a lot of other instances, take a natural disaster. The natural disaster happens. There's a reaction to the natural disaster. And then people, okay, this is what we're going to do. And here's a timeline. And so you can start planning for it. We had no idea when or if we were going to come out of the pandemic. The timing was not set up in a way that, suppliers could say, okay, let's ramp up now so that we have the raw materials for those industries, because likely in 3 months they're going to need them. It's just all woke up like we were hibernating, and all of a sudden it's all happening and nobody knows exactly what it is.
Yeah, absolutely. Couldn't say it better.
And so then we got to look at, changes to commerce via technology. They don't look like they're going away anytime soon. So we kind of know that's in place, right? And a lot of this behavior has disrupted what was there before, obviously, and it changes how we work and live. And that's kind of important. I think you're going to talk about it a little bit, how we work and live. There's been some shifts as to what's expected and what that looks like. According to the McKinsey Global Institute, e-commerce grew 3 times faster last year than in prior years. That trend is not going away. And, we'll talk about this in a bit too. There's been a lot of startups. I wonder how many of those startups are e-commerce startups versus, a brick and mortar small business typical startup, right?
That's a good question. So like you said, there have been major changes in how people work, where they work, and unemployment, disruption in how we get our goods and services. And all of this has contributed to the shift in where people live. So we saw a big exodus from the cities initially, and first-time home buyers were finding homes out of reach in a lot of these markets where people exited to, whether that was in the middle part of the country, where they weren't used to seeing this kind of an influx, or whether it was in other areas where people decided to capitalize on the opportunity to sell their home and sold their homes at these like crazy, crazy increased property values. I think it's interesting that some of those patterns are already going away. And Patrick, I told you this just a few minutes ago, but in New York City, where people are like, yeah, everybody's leaving New York City. There's vacancies, rents dramatically dropped. We're not going to have the city life is going to change. New York is back, people. It's hard to get an apartment, and rents are, I've heard the statistic, 12% higher than they were pre-pandemic. So some of these changes have been more short-lived than others.
And once again, they were short-lived and we swung this way, but how long is that swing? So the predictively, if you're in real estate right now, what does any of this mean? What's going to happen with commercial real estate when are people coming back? Are they not coming back? What's happening with, selling the homes? There's no inventory, but there's also no rentals. So, if you can maneuver through that, there's something to be gained, right? So let's talk about inflation, okay? The prices of goods and services in the U.S. rose by 5% in May from the previous year, marking the highest inflation rate recorded since 2008, an auspicious year, 2008. According to PBS NewsHour and Marist, the latest Bureau of Labor Statistics report released on June 10th immediately generated concerns that high inflation figures could negatively affect the stock market or lead to a price spiral. But economists who then later spoke with the PBS NewsHour indicated that the pandemic-related inflation rates recorded in April and May were tied to events of the last year. So unprecedented slowdowns in consumer spending, global supply chain issues, and deep job losses. So they expect inflation to cool, actually, as most of these issues sort of sort themselves out, unless, of course, we experience another virus surge. And we see, and it's always hard to tell with this. We do see what looks like maybe the beginnings of a virus surge with the Delta variant in states that are not heavily vaccinated. But predicting that is just as difficult as predicting almost any of this stuff that we're looking at. So, one of the things that I think we can definitely say for certain is that all of these things are coming together, right, at a unique intersection, where you've got this lack of labor, you've got workers demanding better pay conditions, they want flexibility, you've got brick and mortar versus e-commerce, not brick and mortar, but yet we see this demand for real estate right now, and even, does commercial real estate start to move towards rentals? I mean, there's so much there, plus the businesses struggling to find talent, even warm bodies willing to work. All of this stuff seems to be pushing us in a few directions that we can kind of pick out, right? Our minimum wages and what workers are going to make is going up. Okay, you see this. Chipotle, Walmart have announced $15 minimum hourly wages. We see all of this willingness to pay for folks to actually come take a job. There's demands by workers for certain benefits and certain flexibility and behaviors that businesses were sort of unwilling to look at before. So it looks as if some of this has swung towards the worker having a little bit more leverage. But I also read an article saying that that's probably short-lived also. So, this is all very interesting. Nationally, we are seeing workers quitting their jobs en masse. They're launching startups. Some of these are things they dreamed about for a long time. And right now, with all these jobs open and everything, it's probably not that risky of a time to try something because you probably think you're going to be employed if it fails, right? New business applications jumped 24% in 2020. That's the biggest surge in history. So on the surface, as we're small business based here, right? On the surface, this looks promising. This looks good. Workers have a little bit more leverage. The big companies are now having to pay what us small business guys had to pay all along, right? And there's a whole surge of the economy focusing that way. But is it long term? Are we reading the tea leaves right here?
And they're almost impossible to read. I will say the Maryland state numbers really echo what you're saying as well, Patrick. The Maryland State Department of Assessments and Taxation, SDAT, saw a tremendous growth in new Maryland businesses as well. We had 91,929 new entries registered with SDAT in 2020, which was a 22% increase over 2019. And May 2021 marked a new milestone with 471,000 just about legal entities being registered and in good standing with Maryland SDAT. So these numbers echo what's going on around the country. I think it's exciting for small business. It's an opportunity. This environment seems like it presenting a good opportunity to try something new with relative limited risk, like you said, because there are jobs out there. They may not be jobs you want, but there are jobs out there.
So I think, some of this stuff with the economy shows a lot of bouncing in different directions. But I'd say, in the first few months, as we're emerging from COVID, we saw actually the country experiencing deflation, right? So in March 2020, the consumer price index dropped by 0.4%, and April was 0.8%. But by mid-April, vaccines and falling cases allowed business to reopen, and people started spending money again, right? So goods and services like airline tickets, rental cars, and hotels, they were first on their list, and so prices started, to rise a little bit. So part of this is a rebound from historically deflated prices. Some of it is a demand issue, but once again, it's yo-yoing. So to ask to be given a predictive thing, I mean, we spent a bunch of time trying to figure out where did we fall on what we thought was going to happen with this, what looked there, and there's just too many factors pointing in too many different directions, right?
Yeah, I mean, take a look at, there's 9.5 million Americans that are unemployed right now, which is kind of crazy. It shows that the economy is like far from being in a full recovery. However, at the same time, we have 9 million open jobs. So again,
There's a mismatch.
And yet, do we expect everything to be totally normal when we are still in the throes of a pandemic? I mean, let's not forget the Delta variant is coming in. It's hitting some states a lot harder than it's hitting others, and it's still looming out there as a threat to a full economic recovery.
Yep. And, let's just say that where we sit right now, we know the economy is going to look much different than it did before. And for those who are on the small business Main Street bandwagon, there are some good signs here. All these startups, the fact that there's leverage that is making the big corporations have to pay some of the same amounts we've had to pay for labor. And so I think that's all positive, but I also think that none of this stuff has settled. It's not definitive where it's going to go or what it's going to look like. And I think it behooves us to choose a path that we feel is advantageous for small business in Main Street and advocate. I mean, it seems like that's the word we use almost every time, is advocate, is support, advocate, and be aware, because we have a chance here with everything shaken up to begin to have it settle in the way that we would want it to look, that would benefit Main Street, and not simply get swung back to where it benefits, the big corporations and the powers that be, quote unquote, the man. But that time is right now, because those jobs are going to need to be filled. They're going to get filled somehow, right? And so now's the time to influence what this looks like.
I think that's a great place to leave it. So thank you all for tuning in to Reimagining Main Street. We'll see you again next week. I'm Laura Richards signing off. Bye-bye.
Bye, everybody.